In this video, I will answer the question about whether the Roth IRA is the best possible retirement account versus the traditional IRA, whether you are eligible to create a Roth IRA, how much you can contribute, whether you can withdraw retirement account money prior to 59 and a half, whether you can have a Roth IRA and a 401k. All this and more in this video. So, which should you choose, Roth IRA or traditional IRA? When you hear Roth IRA versus traditional IRA, you should just think of it as a box where all your investments are either tax-free when you retire or they aren't. They are tax deferred. In other words, you pay the tax at some point later. I would say it is always best to have a tax-free retirement. So that's why I would recommend the Roth IRA. Simply put, tax-free is better than paying tax at some point later on. Quick pause. If you like this video and you think it's educational, please feel free to share it and like the video and share it with your friends. So the benefits of a Roth IRA are it's tax-free growth and tax-free withdrawals. So if you put in, whether you put in long-term investments like a Vanguard with low cost ETFs or mutual funds, all the gains are tax-free. Also, if you happen to be someone who day trades a little bit in your account, that's also all the gains will be tax-free in your Roth IRA. There are no minimum distributions with a Roth IRA. So with a traditional IRA at 72, you have to start taking out some money. But with a Roth IRA, all of that is out the window. You don't have to take out anything. There's no requirement. So you could do it. You could withdraw when you like after 59 and a half. Distributions from inherited Roth IRAs are generally tax-free as well. Taxes are likely to go up at some point in the future, unfortunately. I mean, that's something that we're all worried about. So the most important thing that you can do, in addition to voting, is to actually focus on your own accounts. And so by creating a Roth IRA, you're basically hedging against the future and higher taxes. So putting the money away allows you to say, you know what, it doesn't matter what will happen in the future, I'm ready for it, I'm going to be tax-free with my Roth IRA. Also, another cool thing about a Roth IRA is you can put the money in at any age. With a traditional IRA, I believe when you're supposed to start taking the minimum distributions, they don't allow people to add more money in. So that's another cool thing about a Roth IRA. Now, another cool thing about a Roth IRA is even if you think you may make too much money because you have reached the contribution limits, there's actually a way to create a Roth IRA through the backdoor method. It's basically converting a traditional IRA to a Roth IRA. And you will pay a tax on amount contributed to the Roth IRA, but it still is a one way for people who have the income limitations to create the Roth IRA. Now, whether you choose a traditional IRA or Roth IRA, it says absolutely nothing about how much you will have at retirement. The type of retirement option you choose is just a box. So if you choose a traditional IRA, that's a box. Roth IRA, that's a box. It's basically just determines how the tax is treated at retirement. So what are the limits of a Roth IRA? The Roth IRA contribution limits are $7,000 if you are under 50 years of age and $8,000 if you are over 50 years of age. If you are asking if you can contribute to both a traditional IRA and a Roth IRA, the answer is yes, but it cannot be above the contribution limit. So I'll give you an example how this would work. If you want to put $4,000 in a traditional IRA and $4,000 in a Roth IRA, you can do that. So that would be if you're above 50 years old. So in other words, the contribution limits for IRAs governs both Roth IRA and a traditional IRA. That's the limit. Since the government knows that a Roth IRA is an incredible opportunity for people to grow their assets tax-free, they do limit its availability to people who make a certain amount of money. For instance, if you make too much money, the government just doesn't want you to do it. So if you make under $146,000 and are single, you can contribute to a Roth IRA. If you're married and you your earnings are under $230,000 a year, you can also contribute to a Roth IRA. So, are withdrawals from a Roth IRA always tax-free? You can withdraw from a IRA tax-free if you are 59 and a half and you've had your Roth IRA for at least 5 years. There are other circumstances where a Roth IRA's withdrawal is also tax-free. For instance, if it's paid out to a beneficiary after you've died, it's also tax-free. If the withdrawal meets the IRS first home requirements, you can actually use up to $10,000 of the gain in your Roth IRA and not have to pay a tax. It's also tax-free. If you're affected by a qualified disaster, the IRS has to actually declare it as a disaster for that to count, though. You can also withdraw your contributions made to your Roth IRA and penalty-free. It's tax-free and penalty-free to remove the contributions, and that's because you've already paid the tax on it to put the money into the Roth IRA. Remember, money put into the Roth IRA comes with after-tax dollars. So, you may say, well, Michael, this sounds really great, so what are the negatives of a Roth IRA? Well, I've talked about some of them, but we'll repeat it anyway. The most important thing is there's no upfront tax deduction. A lot of people like their tax deduction now. With traditional Roth IRA, you get a tax deduction. You don't get a tax deduction with the IRA. However, some low-income individuals may get what's called the saver's credit. So they may actually get a benefit for putting money into a Roth IRA in some circumstances. A lot of people don't talk about that, but look up the saver's credit. Maybe if you write in the comments you'd like me to make a video about the saver's credit, I'll make a video about that, but make a comment in the comments below about that. Okay, so there's also the income limit, which I mentioned before, so not everyone can contribute. Since a Roth IRA is indeed such a great opportunity, it may create additional retirement accounts to save enough for retirement. In other words, the one problem with this low contribution limit of like $7,000 is that's really not. It might not be enough for retirement for a lot of people. So you may have to actually add extra retirement accounts in addition to your Roth IRA. Your Roth IRA might not be enough. You can contribute money to a Roth IRA and your individual 401k. And now, if your employer matches your contributions, it likely will benefit for you to max out your contributions for your 401k, since that's free money. If your employer gives you 1-to-1 or gives you 50% of your contributions, you can't beat that. Even though you'll pay a tax later, this is free money that your employer is providing you. I don't think that you should just let it go. So some employers pay 1-to-1, some pay 50%. It pays to actually ask your employer to find out what kind of matching system they have. So anyway, I hope that I answered a lot of the most general questions about people who are interested in creating a Roth IRA. In my own case, I've created a Roth IRA right after college, so I have added the max every single year. So I have skin in the game. I really do believe in the Roth IRA. Long term, I think it works very well for the vast majority of people. I can't really imagine who it wouldn't work unless you really need your tax deduction this year. Anyway, click like, subscribe, and we'll see you in the next video. Let me know what you think in the comments below too. Thanks.